G'day guys, in this video I'm gonna give you an update with Magellan Financial Group because some of you may be interested with why is the share price of MFG has gone down by at least 60% compared to February last year. And make sure you watch till the end because I'm gonna talk about the recent sale by MFG that is unusual. It's out of ordinary for Magellan Financial Group to do the thing like this, and it involves Mineral Resources Limited, an iron ore and lithium mining company. Let's start with the even bigger fund outflows. That means the funds going out of Magellan Financial Group with a net institutional outflow of $5 billion and net retail outflow of $500 million. Because last time we heard on 31st of January, the fund under management was about 93 billion, right? And now, as of 9th of February, is about 87 billion. And remember last time we talked about St. James Place withdrawing their mandate with MFG, which Magellan said that it will only affect the revenue by 12% decrease. So our expectation is about, maybe the mandate is about 13, but Magellan clarified this further, saying that the mandate was actually a lot bigger, it's about $23 billion. And when that happened, the retail investor also pulling out about $1 billion. And don't worry, there is more bad news. Magellan has announced that Hamish Douglas is taking a medical leave to prioritize his health. There's definitely an intense pressure for Hamish. Now we have Chris as a substitute, and we hope that he can turn things around. My personal opinion is that I hope he gets better and keep bringing amazing return for Magellan Financial Group, because if Magellan's doing well, it's a good thing for Australia because it's attracting overseas funds to enter Australia and therefore more tax for our government. Thank you for watching up to this point. Let's talk about the thing that Magellan has done, and I don't really like what they've done here. In this Form 605 notice of ceasing to be a substantial holder, we can see the transaction history of Magellan with Mineral Resources shares with a ticket code MIN. As you know, MRL is an iron ore company. Then they're also one of the major producer of spodumene, the lithium ore. And what's interesting is that if you see on the top table here where it says buy, they have bought about 660,000 securities worth about $29 million, and then on the bottom they sell it about 2 months later for about $41 million, or about 750,000 securities. And if we check the share price, you can see that they're making a lot of money with this transaction in just a couple of months. Pretty much they're benefiting with people pessimism with the iron ore price going down, and suddenly it's recovering to higher prices, which is reflected in the share price increase by about 50%. But this is unusual for Magellan because every single stock that Magellan invests, usually Hamish will have a story about it. Whether this fit with the investment strategy of 9% annual return net after fees. But you can clearly see that they just want to make a quick profit. Maybe they have to pay dividends in the next 3 months. You question again, does Magellan have an interest in investing in lithium companies, or they think that Mineral Resources is overvalued? I think this is a bad move because it will reduce investor confidence in Magellan investment strategy. And I would like to close with this. Is 87 billion fund under management bad? As because we know, Magellan MFG revenue is from the management fee, which is about 0.6% of the total fund under management. If we go back to the fund under management before the good times in 2020 and 2021, say it was 75 billion in 2019 and it was 59 billion in 2018. The question is, would you be prepared to pay $18 a share for the potential profit that they're gonna generate?